That's a very important question, but I don't believe that all the capital by definition has to be long-term that comes in, because I think it requires different things at different stages. Of course, you need to develop something that in the end is of the interest of a long-term investor. But to get there, you can also use more private equity-related capital, because in the beginning you need, following that bold leadership that we spoke about, that sometimes fits better with a kind of capital that's willing to take more risks, to be able to make a breakthrough, for example. So I don't necessarily believe in that. But I think what's very interesting, what we see happening at the moment, is that long-term capital is much eager to take development risks themselves, where we haven't seen pension funds doing that at all, say, up to, I would say, 5 years ago. That was absolutely something that was not done at all. It was only I buy turnkey and nothing else than that. And now I think investors more and more realize that if they want access to core real estate, something that can become core real estate, they have to take that risk, because if they don't do it, someone else will, and then either the price has doubled or you can't buy it anymore. And I also think they realize the added value of having the influence to determine what the end product will look like. Because what you also see investors doing is they more and more concentrate the number of cities they invest in, where before, well, we started off with investors focusing on countries. We've moved to cities, and then the question became, which cities? Is it only the gateway, the global cities, or is it also the secondary, third-tier cities even? I think that hasn't been determined, because you see different investors targeting different cities based on their investment strategy. But some of the global investors, and I often use Norges Bank as the Norwegian oil fund as an example, they have, I think, the biggest investment assignment of any investor in the world in terms of billions, where they go from scratch, well, they've done something now, from scratch to 1 or 2% of their portfolio in a short limited period of time. They've chosen 8 cities in the world to invest in, which I think 10 years ago would have been incredible, because you would say, well, there's just not enough product for you to get that money invested. But I think investors more and more want the influence. And it also comes back to the successful neighborhoods that we talked about. It's having the ability to develop that, and it may not be all at once, but it's incrementally add to it to make sure that what you develop there is resilient for the future.
It obviously depends on which investor we represent, but in this particular case there is a long-term view, and maybe adding to your comment on whether long-term investment is beneficial for innovation or not, I'm actually of the view that a long-term investor is probably not necessarily a good provider for an impulse of innovation, because they want innovation. When they invest, they want to see that a city is progressing, that it will attract companies that will rent their spaces. But once they have invested, they're in for the long term, and they want to harvest what they have forecast in their models. But I think real triggers for innovation are rather the developers, because they review the market each time they enter into a development. They check the market for its competitiveness, innovation, because they have a short-term view, and within a period of 1 to 3 years they want to sell their development. So they will be much more eager to push local governments towards innovation to help them sell their product. So we have a long-term view, and we believe that the city will develop very positively, but we may not be the trigger for innovation in the next years to come.
Okay, so it needs different types of investors. Dick, yeah, go ahead.
Yeah, we are also a long-term investor, but in our policy we have an active management approach of our assets. So I think for the cities it's important to have long-term investors because they are making programs for 50 or 100 years. Also patient investors, because sometimes you have to wait. There are cycles also in the economy of a city. But we think long-term investment is not the same as sitting and waiting for the return. No, it's very important because of all the developments which are coming to have an active management approach for each property you are running. And as I mentioned, the World Trade Center, if you go inside, everybody can see that there's a lot of work to do. And we invested there for the long term because it's a good location and it's freehold. That's also a very important criterion for us. If we invest money, then for us it's important to have a freehold property because a lot of your investment and your value will increase in the ground.
Okay, go ahead.
Yeah, maybe I need to differentiate a little bit what I mean with a long-term investor being a trigger for innovation. I was referring to the city development, what happens in the overall city. The asset in itself, we as an investor will be more having an introverted look into the asset, how we can create value in the asset. We are intending to create an experience in the lobby of the Rotterdam, which we're missing today. So we will have loads of innovation within the asset, but we will probably not try to further develop the inner city of Rotterdam or any other part of town, because we will be focused on creating value within our asset. And being a developer, I think he will rather look to develop the surrounding and have an outside view, not only look at his asset, but also look at the city development overall.